Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets through the lens of technical analysis. Now, we're usually publishing on Fridays. Today, I'm going out on a Sunday. I've got a little bit of a programming note and some exciting news to share that my wife and I celebrated our first child entering the world this week. And I did not think I would get an episode out this weekend, but after a few days of settling in, actually got 4+ hours of sleep last night, which is a pretty good win. And baby is currently napping. Wife is good. There's some calm here. And I figured, you know what? Let's see if we can just do a quick recording. So with that, we're going to run through some charts. It was an eventful week, but programming note going forward, sticking to a firm Friday schedule may not happen anymore. May have to just do a broad sort of weekend schedule here on the YouTube videos, but we'll see. We'll take it day by day. So here we go. Let's jump into it here. Now, if we take a look here at the 1 week returns, you can see again a pretty painful week out there for the stock market. And we talked about lots of these issues last week, right? With the sort of momentum and technology sort of crash and unwind, right? We talked about a lot of the carnage out there from those leading big heavyweight sectors in the market. And that's really sort of continuing here. You can see volatility was up this week pretty firmly. All of our markets, so if we're looking at our smart trend filter indicator here, which measures price and volume spanning across time. I mean, we had kind of warning signs printed in late February, last week of February, and then producing full on sell signals into the end of the month, basically, across all the majors. And this downtrend is continuing here. So there's not a new downtrend. It's just a persistent, sticky downtrend. If we look at our sectors here, again, you can see things are struggling to stay afloat. We've got the most defensive areas of the market at the top of the list here. So you can see healthcare and staples basically flat this week. And if we go to the downside, you got financials, consumer discretionary, tech, just some big hit here, and energy as well. Some of those big sectors that continue to sell off. Now, again, if we look at our sector trends on the our smart trend filter on the sectors, you can see basically everything's in a downtrend except for healthcare, except for staples and real estate. Real estate's actually kind of made the turn and is catching a little bit of a bid here, which has been in place now for some time. You can thank those lower interest rates for that. So that is kind of the way things are looking here. If we look at our factors though, right, and this is kind of telling as well, is if we look at our growth to value, you can see that the growth continues to see an unwind here. These are ratio charts. So you can see growth is still out of favor. High beta versus low beta, right? We talked about this a couple weeks ago. Look at this sharp unwind here. And again, if we start to look at even emerging markets, you're seeing a theme now where ex-US is doing well. We're going to look at a couple of charts of that. And credit spreads are maybe, widening a bit, but not too concerning. Semiconductors, leadership group, underperforming as well. So these are all ratio charts, but really kind of speaks volumes to the trajectory change that has been taking place here over the past couple of weeks. Now, if we go to our market breadth here and we look at 52-week highs and lows underneath the hood, you can see that we're still seeing the number of stocks hit 52-week lows continue to outpace, not by any wide margin. Again, I think you're seeing enough rotation in the market rather than straight up fleeing the market. We're not seeing any panic washout, very large expansion of oversold or stocks hitting 52-week lows. We're seeing it just kind of stay slightly elevated, but not dramatic yet, right? Which is concerning if you're looking for the washout, concerning if you're thinking that this rally might be done. But you could also take the optimistic view here that there is rotation. There are other sectors outside of Mag 7 and outside of just those specific stocks that are picking up some of the slack. Furthermore, if you looked at a short-term measurement here of 1 month stocks at 1 month lows, you're really not seeing any critical readings right now, right? So if you still are looking at S&P 500, Qs, or Russell 2000, the percentage of stocks that are at 1 month lows, we're not at washout territories, despite the fact that this market has kind of sold off in a straight line and has been very reluctant to stay bid. Now, I want to make a quick pit stop here because IBD, after all, does sponsor this series. And so shout out to Investors Business Daily. This is their IBD 50 list, and they are still pulling out some decent winners here, even in a tougher tape. Take a look at their top 10 out of their IBD 50 list. We've got links in the description of the show to get your IBD digital subscription. You get access to their newspaper editorial and IBD 50 list. You can see these are the top 10 names ranked, sorted as of this weekend. Have some nice winners there. So check it out there after you're done watching this video. Let's move on to our macro slide here. Take a quick look at the US dollar, which had a massive move. This was one of the biggest moves we've seen in many years for the dollar. The dollar index, just going on a weekly basis, we could throw on rolling returns. I mean, this is pretty much one of the worst weeks we've seen in a very long time. Quite oversold in the short term. Does speak to perhaps the changing of the underlying expectations in the market, and could be very beneficial down the road if liquidity and easier sort of profit margins from some of those big global companies start to kick in. But that's down the line. If we take a look at treasury yields, you can see they were inching a little bit higher this week, but still are generally speaking on a down swing. Silver, copper, Bitcoin, all up this week. Same with gold. Oil continues to be in a tough spot. So let's get into some charts here. We're going to wrap it up and not be too long here, as I'm sure I will get called away. If we take a quick look here at the S&P 500, let's take a quick view of these technicals, and we can see now that from the peak, which was on the 19th of February, we have sold off pretty much, call it 8% in more or less a straight line. We've had a lot of volatility. We've had plenty of plus 1% days back to back in the S&P 500. We haven't really been able to muster up a 2-day plus rally. It continues to be kind of a 1-day reversal, and then it just gets immediately faded. Now, the S&P 500 is back to kind of testing, or I should say it tested on Friday at the lows, some of the November pivot lows here, some of the October lows, and got pretty close to sort of the July highs, testing this big breakout level from the last year, basically right in here. So this was a pretty big zone. This is a zone where you do want to see buyers step back in. For those of you who like looking at the big 50 and 200-day moving averages, this also coincides with more or less, well, slightly above, I guess, where the 200-day is coming in. So we found a spot to bounce here at a very logical technical spot. And so that was encouraging to see. When futures open here on Monday or Sunday night, I guess, we're going to want to see if we can continue this bounce. Can we get more than just a 1-day bounce? I think the most optimistic or encouraging thing about this market is the fact that sentiment is so bearish. That positioning, retail specifically, is very bearish on this market. And when you see things like that, and most sentiment surveys is really what I'm speaking to, and just some of the extreme oversold readings in the highly owned retail stocks like Palantir or Tesla or you name it, it's pretty poor out there. And so you don't really have a lot of optimism that's priced in. And so when you start to get sentiment tipping that aggressively negative, you do tend to get those technical bounces to kind of at least stir up the pot a little bit. Now, I will say the macro environment, though, is still pretty concerning. I think, I was looking at headlines again. I was kind of away from the screens this week, but I mean, I saw the headlines coming out of Scott Bessent basically saying short-term pain should be expected, right? There's no Trump put in this market. They are basically, at least the rhetoric is kind of playing loose and fast with the stock market here and not really going to be focused on talking it up, right? Their focus is really on the 10-year treasury yield, it seems, and cheaper oil, right? And both of those things, right, quite frankly, have started to be achieved, right? Or at least for now. And so, the S&P 500, the stock market, I think is just recalibrating and under some pressure. There's obviously a lot of uncertainty, right, with tariffs, which seem to be sticking and staying. So there's just lots of uncertainty right now. I think the pullback here makes sense. We've been talking about having, a 10 to 15% correction in the S&P 500, which generally speaking, you don't really even need that much of an excuse to get on, every year, a nice 10 to 15% correction. This clearly seems to be one of those periods. Now, I just think the more concerning part is the fact that we did go sideways here for some time. You've got a little bit of overhead supply up here. And so just again, if you start to really roll over hard from these levels, if you flush below the old July highs, the 200-day moving average, then you could get some of that, real panic in the market that could create a more durable low, right? So again, if you're a short-term trader, I think your eyes right now are looking for that technical bounce. Maybe Friday was it. It doesn't really feel like panic though. This still feels like pretty orderly selling. Even though we had plus minus 1% days back to back to back, this feels pretty orderly still. I haven't seen something that looks like this, right? This bar right in here, a real good kind of puke cleanse and capitulation, right? Where some funds get blown up and some panic really sets in and the VIX spikes and we get a large outsized range from oversold conditions. We haven't gotten that yet. And so again, I think as a trader, I would love to see, I would love to just see the sell-off just really kind of extend itself fast, sharp, get a reversal, and then have a more convincing, tradable, durable bottom to work with. Maybe Friday's it. Again, it's at a very logical spot where you want buyers to show up. So maybe we get a little bit of a dead cat bounce here, but I'd still be a little bit cautious, just broader picture. Tariffs roll off. If, we get some more clarity, if Fed, more dovish and looking to cut or cut quicker, then, we get some more repricing and that can change the landscape. But as of right now, with all the uncertainties, with tariffs the way they are, with the department basically saying, or the administration basically saying they're effectively looking to sacrifice the stock market right now, then it's just a tougher macro picture. Now, if we look at the Nasdaq 100, we are finally got the 10% plus correction. We're 11% at the lows on Friday. Weekly chart here, we have lost this 500 zone, this July highs in the Nasdaq 100. The Nasdaq 100 just looks to be in, again, a tougher spot. There's a lot of volume that traded this week, right? There was a good amount of dollar volume, so there was definitely some activity, kind of churning through. But again, I don't know that we've seen the real panic yet to really say that a good durable low is in right now. We're going to look at the Mag 7 in just a little bit. Russell 2000 continues to be in a very tough spot as well. I think this is 1, 2, 3, 4, 5, 6 weeks down in a row for the Russell 2000. I mean, it's certainly oversold, right? It's certainly oversold. And again, a technical bounce coming soon here does seem to make sense. But that's what I'm sort of looking at or thinking about in terms of the major markets. If we take a look at the move in that dollar, this UUP chart's a little skewed, but this was the weekly move, of course, in the dollar. Ignore this move here. This is a gap that's from distribution, but this weekly move is a big one, right? And it's kind of coming and resetting itself, kind of retracing a lot of this second half 2024 move up, pricing in, sort of the Trump's come into office, and it's kind of unwinding a lot of that right now. So a little bit oversold there in the short term. I think where you're picking up some of that slack though is again outside of the United States. So if we look at the ACWX, which is essentially iShares version of the global stock market outside of the United States, it was up 2.84% this week, right? So China, Germany, just European countries, pick your poison. These areas of the globe that have not seen much love relative to the United States are suddenly starting to pick up and really outperform on a relative basis the US. So that's notable. That's interesting. Lots of big volume coming in here. So ACWX is interesting. And of course, you can go down in a more country specific measurement. I want to talk quickly about Bitcoin. Bitcoin looks about as bad as it's looked in many months, quite frankly, right? Since, certainly last year, we broke down from this range here of 92K, which was the lower end kind of support post-election. We kind of ran up pretty aggressively into the upper 90s, and then we were kind of chugging along sideways here. And then we convincingly broke down, tested it a few times. We failed. This looks pretty sloppy, some heavy action here, and it feels like we need to, again, find some good capitulation before we can move higher. I think call it 92,000 or so in Bitcoin, the spot Bitcoin price. If we can get back above there, start to move back above this breakdown zone, then we're back in business. But until and if that happens, sellers are in control in this market. The way I see it, our longer term trend following model exited this our Bitcoin position back here in the fourth week of February. So we do not have a position here in our trading model there. So we're waiting to see more stabilization. I think there needs to be some capitulation. We're probably close. I think maybe another retest or undercut of the low here below 77 create some panic. Find that reversal candle, get a nice expansion in range, run some stops, all the good stuff. And then maybe we have a nice tradable bottom to work against. Take a look at IBIT. This gap never really got filled in here. So let's see if we can, fill this gap. I know the CME futures kind of did, but see if we can fill this gap, and maybe that would be enough to create some panic there. So that is Bitcoin. Let's talk really quick, and then I'm going to wrap up here about Mag 7. So if we take a look here at the Mag 7 individual stocks, we can see here that we've basically saw more pain outside of Google this week. Just a lot of selling pressure here. This is obviously weighing on the indices generally speaking. I think if you look outside the Mag 7, you look at equal weight, you're going to fare a little bit better in this market environment. We've got a lot of sloppy charts here that are in pullbacks. Now, again, it depends on your time frame and horizon here. If you're don't have any exposure to the Mag 7, I mean, this might not be a bad place to start, some type of DCA process. But from a trading perspective, I don't see anything that, again, I see some hammers here. I see some things that need some follow through. But right now, we're just in these short-term downtrends. If we look at something like just an easy way to illustrate the performance of the Mag 7 as a group, if we look at the MAGS ETF, you can see that we are in a 19% drawdown, let's call it, in the Mag 7. So that's notable. It's one of the largest we've seen going back multiple years. Back in 24, we had a 22% drawdown. And then prior to that, we had just a lot of different chop, and then, 10 or 10% drawdowns or so. So again, if you're longer term, maybe this is a decent spot to start some type of DCA here. It's had a nice correction, but for now, it seems like there's more exodus away from these stocks, rotation out of these stocks into other areas in the market, and it might just need more time for that story to play itself out. But it is notable, it is oversold, and I think you can start to look at some of those big heavyweights as a positioning opportunity. So that is it for me. Very busy week out there. We didn't even scratch the surface of all the different headlines that hit the tape, but from the charts perspective, that's what we're looking at. Orderly selling for the most part. We're going to keep an eye out for a technical bounce or capitulation event, but the macro picture right now looks increasingly weaker in my opinion, but there will be light, hopefully at the end of the tunnel, right? Once tariffs finally resolve, maybe there's some stimulus, maybe Fed comes in quicker, right? There are things that government spending, depending on what all that is going to start to look like. There are, signs of, I guess, taking the medicine early here and then having a better period down the line. We'll see if they can pull that off. But for now, that's the way I'm looking at it. So that is it for me. Thanks as always. Again, we'll stay tuned. We're going to try and at least stick with the weekend schedule and see if we can make that happen. If not, maybe some shorter videos throughout the week, maybe in the middle of the night, even as I have time to spare to publish some videos. And so hope everybody's doing well out there, and talk to you in the next episode. Take care.